Do you have to take money out of your inherited IRA in 2024? Keep watching to find out. So new information came out from the IRS regarding beneficiary or inherited IRAs. I know Tom has talked about it in the previous 2 episodes, so go back and check those out if you want further details on the Secure 2.0 Act. We're gonna specifically be talking about non-spouse beneficiary IRAs. Beneficiary IRAs and inherited IRAs are the same thing, so I'm gonna use them interchangeably here. So non-spouse means, mom, dad, brother, sister, cousin, someone other than a spouse passed away and left you their retirement accounts. They left you their IRA. So originally, pre-Secure Act, there were rules in place that allowed you to stretch the distributions from that inherited IRA out over your lifetime. In 2019, with the first version of the Secure Act, this changed. They said that you have 10 years to drain the account. People interpreted that as, okay, I don't have to take anything until the 10th year, and then I can drain the account and take out the balance. In the Secure Act 2.0, the IRS changed up what they were saying and said that yes, you still have 10 years to take it out, but also you have to take a required minimum distribution from the account each year. Whoa, whoa, whoa. This isn't what we thought. This sent people scrambling because they were worried, well, I didn't take any money out because I thought I could wait until the 10th year to do it. So am I going to be penalized on that? The IRS didn't really give enough time or enough warning for people to plan for these required distributions that they were now saying people had to take. The biggest issue here is, tax preparation, because IRA distributions are taxed as ordinary income. So if you're required to take out an extra 10, 20, 30K each year, it depends on the size of the IRA, how much you'd be required to take out. That could push people up into a higher tax bracket, giving them a higher tax bill, or it could mess up the plan that they had in place to minimize taxes. So it threw people for a loop, and there was enough pushback that the IRS said, okay, we hear you. 2022, they said, we're not going to penalize you if you don't take any required minimum distributions for this year. Okay, that was good. 2023, we were kind of waiting around to see what they were going to do for almost a little more than half the year. We were in limbo. We weren't sure what they were going to do. They extended that through 23 as well. And here we are in the middle of April of 2024, and they've extended it yet again for 2024. So you are not required to take a minimum distribution from your inherited IRA this year in 2024. We'll see what guidance the IRS issues for 2025. Hopefully they put a permanent set of guidelines in place so we can start to plan for these distributions and not be guessing or worrying about what they're going to do. Also just want to throw in another nuance because there's not enough already, but if there are different types of beneficiaries, so if the person you inherited the IRA from was already taking their RMDs, so if they were already in their 70s, different set of rules might apply to your situation. So a ton of moving parts here. I know it's confusing. We're doing our best here to communicate with you and to communicate with our clients in these situations. So please consult a professional if you have questions. Either that's your tax preparer or an investment advisor, or let us know if you need clarification on what you should be doing with your inherited IRA. So I'm sure we'll be talking about this topic more in the future, but for now, thanks for tuning in to this week's episode of the Mullooly Asset Show.